Wow, it's a great time to be alive in cryptocurrency.
Why the you lying? Why?
Obviously, I'm being sarcastic. US stock futures are down sharply this morning as global sentiment shifts to risk off, which is bad for cryptocurrency. The S&P 500 futures dip below support at the 50-day moving average. The Hang Seng Properties Index is down 6.8% on Monday, with Evergrande leading the way, and this is primarily because of Evergrande Group. As you can see here, El Salvador got our back, and they are buying the dip, okay? They are buying the dip, as you can see here, presidential advice. The Daily Shot says as much as 55 billion of China's property developers' debt will mature next year, followed by another 44 billion in 2023. All of these issues caused the price of Bitcoin to drop 10 to 15%, as well as all of these big altcoins dropping 20%. It's absolutely crazy. And then you can see here, Coinbase is actually giving up on their USDC product because of regulatory scrutiny. In today's video, we're going to be going over macro conditions, market conditions, as well as the regulation in cryptocurrency that's currently happening. All-out war on cryptocurrency. All-out war on cryptocurrency, and then I'm going to go over my moves moving forward. Keep watching. What's going on, everybody? Alex back with another video. Today we're going to be going over a lot of topics of discussion. I'm going to tell you exactly why I am positioned to go all in on cryptocurrency. I'm going to go over the market conditions, macroeconomics, as well as some regulatory issues that are happening in cryptocurrency. And then at the end of the video, I'm going to tell you exactly how I'm going to go all in on cryptocurrency and why I think it's still extremely bullish. If you appreciate this content, do us both favors, subscribe to the channel, like the video, and share it with a friend. I talk about cryptocurrency entrepreneurship. I don't accept sponsorships in any way, shape, or form, which allows me to have an unbiased opinion on cryptocurrencies. And of course, I keep things down to earth. I try to keep things as honest and transparent and back up pretty much everything I say with evidence. Let's jump into the topic of discussion here. So if we come over here, you can see that Coinbase is clearly giving up. They're giving up. We are not launching the USDC APY program announced below. And the reason for this is because there's been so much regulation in the market that I get it. I can completely understand why they don't want to launch this product. They don't want to, get in trouble with the SEC. And then you can see they're also making moves to partner with some Homeland Security and stuff like that. We'll go over that. But if we look over here, you can see in the past day or so, excuse me guys, I didn't make a video yesterday. I was just a little tired. I've been moving into my new house. But as you can see here, Bitcoin's price is dumping pretty hardcore. Now, I also want to be very clear with you guys. We were drawing out some support and resistance here from a while back. I drew this line a long time ago. And you can see we closed on the daily literally right here. Literally right here. And then overnight, we had actually a pretty steep fall back down to 40K. I told you guys, when it comes to Bitcoin, once it got to anywhere from 40K to 43K, I was going to start buying. And yesterday I started to buy. So I'll tell you what I bought towards the end of this video. But as you can see here, there's a reason why I drew that line. So from here, it can go one of two ways. I mean, it's pretty obvious. See, every market can only go up or down. I don't know why I said it like that. But as you can see, this could be the confirmed dead cat bounce, and we can continue to go down and bull run over. We actually saw BitBoy Crypto, the largest community in cryptocurrency, saying that he's calling the top in the next 2 weeks. He thinks that it's probably over. And, I just don't share that same opinion, to be completely honest with you. I believe in the theory of expanding cycles. I think even though this is typically where the top would have been in last cycles, I think that being that there's more money in this and being that there's institutional demand with actual products like DeFi and NFTs that are actually being acquired right now with real transaction volume, I think this is going to expand the cycle, and I think it's going to take longer to reach the top, and that's just my personal opinion. I still think October is extremely bullish. This is one of the coins I bought the dip with, which is DOT. I've been talking about DOT over and over again. I really do think they're undervalued when it comes to the layer 0 ecosystem. There is no competition. And if we talk about smart contract platforms, again, I think they're very, very undervalued and under talked about right now. I think they're going to do really well. So pay attention to that. One other thing I did notice is that, Bitcoin's dominance is kind of breaking out. If we look at the 1 day, it looks like it might have bottomed for Bitcoin dominance. This is typically what we see, when the market's volatile, we'll see people kind of fleet. And it was more apparent in last cycles in 2017, 2018, even before that, people usually fleed to Bitcoin because it's the safest cryptocurrency. It's already, regulated and stuff like that. And countries are adopting Bitcoin. They're not adopting Ethereum, but there's a potential like it has bottomed out. And if Bitcoin starts to steal the show again, we can expect altcoins to most likely come right after, not during. If Bitcoin rises in dominance, altcoins are going to bleed in comparison, in my personal opinion. So there's a lot of ways you could look at this, but I just wanted to point this out, that the Bitcoin dominance chart looks like it bottomed out here. So Bitcoin dominance looks pretty interesting. Also, another thing I wanted to point out is this chart here. The top of cloud is showing, I believe, 2013 cycle, and at the bottom is 2017 cycle. So you could see that if we took the same percentage growth, we have like this cloud here, and Bitcoin's clearly trending out of the cloud. So it's not even following anything, projected in previous history. And this is why I've been telling you guys, it's primarily because of institutional demand and manipulation. These guys are manipulating it. They're trying to get cheaper Bitcoin. They want to basically look at the stock to flow model and these big indicators that everybody follows. They want to invalidate these things so that scares people. People don't understand what's really going on. Remember, at the end of the day, like, they understand what we consume as information, and they will manipulate it at will. Also, I just wanted to point this out again. In June, I sketched out the rough path of how Bitcoin could go towards this S2F target of 100K in December, just confirming we're still in that path. Again, like I said 100 times, guys, I do think the bull run's going to continue. And I did have like a more bearish perspective. Again, I said it like over and over again for the past like 5 to 6, 7 videos. I told you guys we were going to have a massive dip, and this is why I had cash on the sideline. And this gave me the perfect opportunity to inject more liquidity. And actually, I made a lot of money in the past couple of days because of this reason. So, I try to let you guys know ahead of time. Like, I will tell you ahead of time what's going to happen. I don't know the exact date. I don't know exactly when. And maybe I'm not perfect when it comes to actually buying, but I will let you know what it looks like. And what it looked like is there were going to be a massive dip. And what happened was a massive dip. Exactly what I projected here and here. I told you it was going to come down to about 40K, 42K, exactly what we expected. I didn't think it was going to go down to 40K. I thought it was going to be anywhere from 43 to 42K, but it did come down to that number. Again, because of FUD manipulation, you can call it technical analysis, sentiment analysis, whatever you want to call it. My coaches were calling for this from a technical analysis basis, and I was calling it for a sentiment analysis basis. And we both came to the same conclusion. So I was prepared. I injected money into the market. So it was actually not that bad for me, completely honest with you guys. If we come over to regulation, this is where it gets really interesting because this is basically the topic of discussion here. As you see this random guy, I just witnessed a guy get served by the SEC at the top of the escalator at Mainnet 2021, right before he goes on stage for his panel. I don't know who this was, but there was somebody definitely served by the SEC, and they are cracking down. The IRS says it plans to award contract for crypto startups cross-chain tracking software. So you can see they're clearly investing infrastructural products to track people. This was published last week by the Internal Revenue Services. Very interesting. They're beefing up their cross-chain transactions. So layer 2s, layer 0s, whatever the case is, they're trying to track it for tax purposes. The SEC files enforcement action against alleged crowdfunding scheme. Honestly, this is irrelevant. I don't even care about the scheme, but you can see they're attacking, the SEC is attacking. After BlockFi, New Jersey and Texas set sights on Celsius crypto interest accounts. On September 17th, New Jersey securities regulator ordered crypto lending platform Celsius to halt offerings of its interest on accounts in the state. We see Coinbase being attacked. We saw BlockFi was the first. Now we see Celsius, one of the oldest interest-bearing softwares. It's just scary right now. They're attacking at all fronts, basically. Alabama as well. Alabama securities regulators also scrutinizing crypto lender Celsius. So everybody's pretty much going in on cryptocurrency DeFi products right now. It's for obvious reasons. It's because the macro conditions are very scary, as we talked about in the intro. As you guys can see, they are intimidated with a product that's offering 20 times better than what they're offering. Even if it's 5% APY, which we know is on a low end in crypto. We know 5% APY is a joke in crypto. We can easily get 10 to 15% on some of these DeFi protocols with yield and stuff like that. But they're so intimidated because banks are currently offering 0.01% a year. So if you guys know anything about, like, for example, business models and how it works, when you create a competitive product towards somebody else, let's say hypothetically you have a car and Tesla comes in and Tesla wants to create this own car and wants market share, your product has to be like 10 times better. And in the case of interest-bearing accounts, Cryptocurrency is like 40 times better. So of course they're scared when they're offering 0.01% as a bank, and Celsius is offering 9% APY, and Coinbase is offering 4 to 5% APY plus insurance on your money. Of course they're scared. They're frightened that they don't want to lose market share of the United States population. They don't want people to start banking with crypto services, because they know when that happens, then the snowball will continue to go and people are going to move into Bitcoin, and they're not going to care about USDC, and they're going to go into appreciating assets. And that's where it gets crazy. Homeland Security inks deal with Coinbase for its blockchain analytics software. So we see them falling back on the lending platform. I'm making a full video on Coinbase. They're getting really sketchy right now. They have a history of insider trading. They've gotten sued multiple times. They're right now, like I said, they're inking deal with Homeland Security for its analytics software. At the same time, pulling back the lending product. They are not attacking. They are not trying. They are folding under pressure. And I don't know. Again, like, this is all speculation on speculation. I don't run Coinbase. I'm not the CEO of Coinbase. I don't know the moving variables and exactly what's happening. Maybe they're trying to do, kind of like a Trojan horse and move in with the regulation, trick them, like they're on their side or whatever the case is, and then eventually come out and take over. I don't know how they're going to do it, but in general, they are folding right now, and they are basically falling victim to the regulators. Nexo CEO details crypto lenders plan to stay out of regulators' crosshairs. I'm not going to read into this because it's going to take a while, but basically you can see other companies shifting to avoid the regulation, including crypto exchange FTX establishes subsidiaries in Bahamas. So it's getting there. Clearly they're attacking, and we are posturing in a way to avoid regulation. So cryptocurrency is getting kind of uncertain and scary right now. Again, they're going to fight us at every corner. To me, the way I look at it, it's like, okay, and I'll show you guys what I'm talking about, but basically inflation is very high right now. It's higher than we expected. It's like, and some people are claiming like 30%. Actually, the guy from The Big Short, I'm going to show you his tweets. He actually deleted his tweets. I'm going to show it. Where he's claiming inflation is extremely high. And we'll go over some of those details. But it's like, if you're losing 30% of your money by holding United States dollar, then at this point, like, you might as well just buy crypto. You can pretty much have no choice at that point, or gold or something, I guess. But who cares about gold, right? But I want to show you guys this video here that launched yesterday to kind of give you the perspective of what's going on in traditional finance. Remember, regardless of Bitcoin being, I guess, a store against inflation, and it's exiting the current monetary system, if the current stock market in the world goes down, cryptocurrency will go down. I just expect it to recover a lot faster than everything else, and that's why I'm all in on it. But let's see what they're talking about here.
Yeah, look, I was saying that the sell-off's going to begin last week. It's going to continue for a couple weeks. And that I was kind of using a Tolstoyan analysis, which is that all bull markets are happy, but each bear market is unhappy in its own way. I mean, this one, we suddenly decided that this project, this problem, this $300 billion debt is an issue. It has been an issue for months. But we always felt that the PRC, the government, would bail them out. And David, what this seems to be is a recognition that when the nation's richest man, which is the person who owned Evergrande, is in trouble, we no longer expect the Chinese Communist government to bail them out.
Yeah, I mean, it's part of what has been happening there in the last, I don't know what you call it, 6 months to a year, over a year now,
yes,
actually.
That's why it's a slow.
Literally think about it, what they're saying right now. They literally expect the country to bail them out. So they're like, it's almost like they're comfortable with this bailout talking right now. Like, it's absolutely ridiculous. When a company fails, they should go bankrupt. But that is not the current state of our monetary system. And this is mimicked in the United States, probably to a lesser extent. But it is definitely a thing. Housing market crash 2008. Actually, the reason Bitcoin was created in the first place is happening again in China as we speak.
Slow motion train wreck, but it's been going.
Because it's not as though we haven't talked about an overheated property market in China for many years. And I mean, there have been so many times that we have perhaps set up, this default, or could be the key one, or this could really undermine the entire financial system. I mean, it's not hyperbole. You've heard that many times through the years, and of course it doesn't happen. The Chinese figure out a way. Somehow the banks continue on. And those who saw financial Armageddon have been wrong. But here we are again with an enormous property company that has enormous amounts of debts, that basically is trying to actually make good on debts by giving people and or vendors, empty apartments that aren't even finished.
Yeah, you're allowed to get
that's kind of where they are
parking
now.
spots. Carl, one thing I want to point out is we sit here and we talk about how the United States is not allowed into China. We're not allowed to make loans in China. We're not allowed to be part of China. Oh, but when China goes bad, suddenly we're involved with China? I am sorry. Look, we know we have to deal with 3 or 4 days of people who don't know what they're talking about coming on and talking about contagion. All I can tell you is we wish we had contagion. We're not allowed in. Our banks are the safest banks in the world because we have just been told by China forever, good luck, you're not coming in. So I can sit here and watch all our banks go down, Carl. But you know what? I am going to say this is the silver lining, the playbook silver lining, although the Eagles look terrible, of what I regard as being, it's the other side of, hey, you're not allowed in. They need us so badly, but we're not going to play because there's no reason to.
Yeah. I hear you talking about the relative safety of U.S. versus China, Jim, but how do you fold in the Evergrande concerns with general stagflationary concerns, what this does to the Fed meeting this week, obviously the dance that we're witnessing between Manchin and the White House and the House?
Look, all of that is negative, but so is the debt ceiling. I mean, we actually have, when you have people like Janet Yellen saying this could be catastrophic, you start thinking about the S&P being downgraded. That caused a 19% sell-off 10 years ago. I look at this moment as being faux perilous. I say faux because everything could be contained by oh, David's going to hate this, responsible politicians. If you think that they're responsible politicians, and we don't necessarily need a multi-trillion-dollar bill to hire people since we can't find anybody to work anyway, then you know what? We have to suffer through this period, David, where we can't get anybody to work. Hopefully that they don't create even more jobs that we can't find anybody to work. And then we deal with it. But we have to go through it first.
Jim, it feels like we've had more showdowns over the debt limit than even worries about the property market in China.
80 in the last couple decades.
It's, but at the same time, if it actually were not to happen, it would be, do you not believe, a significant moment that would potentially be a very bad one for the financial market?
Yes, and that could cause a bottom. I hate to say what could cause a bottom, but since I've been negative for so long, I'm not looking for a rally. I'm staying negative, and then we'll see. There'll be cues. I mean, Carl, look, we come in this morning, and suddenly this thing that has been this looming crisis all over the globe, with the exception of the United States, because we're much more hostage to whether the Fed's going to raise rates. And suddenly people are like frantically just go, what is this Evergrande? What do they do? Oh, they own 1.5 million apartments. Oh, the apartments are empty. They've asked the employees to pay. I mean, this thing's been going on forever, but it hasn't been part of our lexicon because we're so busy talking about how the Chinese are saying to us, stay out of our markets. So, look, I think that this isn't as negative as the idea of the debt ceiling. Once again, Senator Manchin this weekend, but now some other moderates are saying, you know what, maybe we shouldn't have a big infrastructure. And that's causing some of our infrastructure stocks to trade down. But look, the narrative is negative. Maybe we have to be saved by earnings. But this is a moment, a 20-day period that started last Wednesday that is historically the worst period for 20 years. So we should not suddenly wake up and say, you know what? It is time to buy AMC Entertainment.
Yeah, so I'm pretty sure you understand by the tone of his voice that it does not look so good. Plan B coming out here saying, so first, the Chinese virus with 0.15% IFR brings down all Western economies, values, and freedoms. Then Evergrande, China's largest real estate developer, collapses, possibly bringing down China's economy. Now, I'm not going to sit here and say this is like speculation on speculation, even close to a conspiracy theory. But if we come over here, you could see clearly that there are issues out there in the economy. I'm just only highlighting the fact that we have these two major black swan events happening, and now they're having to demolish buildings because of Evergrande's issues. Big problems here. Now, this is Michael Burry. This is the same guy that actually was the main character in The Big Short. Around 2008, he was calling the housing market crash, and everybody laughed at him for it, basically. And now he's coming out again. The reason why we're looking at this is his real Twitter, but we're looking at a different Twitter because he deletes his tweets. I don't know why he does that. Maybe he's scared. I don't know. But regarding inflation, so the Federal Reserve, are you lying to us or are you lying to us? And if we read here, it's basically saying year-over-year target in July to the idea that inflation is already coming. They're basically just trying to beat around the bush. Mr. Powell used a gauge from the Dallas Fed that throws out the top 31% and the bottom of 24% personal consumption expenditure price changes, and was bang on the Fed's 2% year-over-year target in July. It's just, at this point, they're just lying to our face over and over again. So inflation can be very high. And this is what I'm saying about cryptocurrency and why I'm so bullish. It's like, who cares if crypto goes down at this point? Everything's going down at this point. You might as well place your bets in a place that at least has a chance to recover a lot quicker, a world currency that's exiting monetary inflation, exiting monetary policy, what's going on in traditional finance. We have the best option in front of our faces. This is his actual Twitter. As you can see, he deletes all his tweets. I have no idea why. And then just another chart just showing Evergrande Bond Flush update. If you're wondering why you should care, you will learn the market looks like it's coming down. Big time issues. In Google Trends, you see Evergrande all over the place. We see the stock market. We see Michael Burry, the guy from The Big Short. This is the topic of discussion right now. People are getting scared, which brings me to my last point here in the final analysis. This is basically the gist, and I said it like multiple times, but I'll explain why I'm going all in on cryptocurrency. It's just very simple, right? 6 consecutive months where inflation is above the 2% target set by the Fed. You can clearly see it right here. Now, this is also a new way of calculating inflation. If we look at the old ways of calculating inflation, we're looking at like at least 10 to 12% inflation this year. Every month, the Federal Reserve Bank of New York conducts a survey to gauge the expectation of the U.S. consumers. Guess what? Consumers see inflation still above 5% next year. So as you can see this chart right here, they are expecting 5 to 18% in 1 year when it comes to inflation. So not only is there inflation, but people expect inflation, and you're going to see them start to move over into commodities, gold, Bitcoin, right? First, U.S. consumers do not expect that their earnings will be able to keep up with inflation. They do not expect their earnings can keep up with inflation. Their guess is that a year from now, they will earn 2.5% more than today, and it would need to be twice as much to maintain a balance with these price increases. So they literally, it looks like the average investor literally knows that inflation is eating away at their savings. So you can imagine that people are getting worried that their real purchasing power is falling behind. The longer this transitory period of inflation lasts, the more people are worried about their purchasing power, and the more they're going to want to invest in assets that help them stay ahead of the curve. And this is where Bitcoin comes into play. Look, we could look at the technical analysis, we could look at like these charts all day, but the conditions in general are setting up for, some type of hedge. People want to hedge, including Bitcoins. We could also see on on-chain metrics, I've pointed this out in multiple videos, that the whales, the miners, are holding strong. They're accumulating more Bitcoin in these times of uncertainty. Retail just hasn't caught up yet. And this is why I've been telling you guys over and over again that it might be even smarter, just with the economic conditions that are happening right now, just to go all in on crypto. This is what I've been doing. This is what I'm saying. So what did I recently do? Yesterday, I actually went in hardcore on DOT. You can see DOT's dominance has been increasing steadily. And I think the risk to reward right now is DOT. Now, I went pretty aggressive. I didn't go exactly all in, but I'm waiting for another dip or potential another entry because we can see the total market capitalization increased by a significant amount. So I'm up a couple of percentages on that. But the game here is exactly the game I've been telling you guys. I'm watching Bitcoin's price. I'm waiting for Bitcoin to make support, which it looks like it probably did. If we pull up BTC USD, let's see if it makes some support on this line. We could continue to go down further, in which case I will start dollar cost averaging. I'm really looking at the bottom of this order block here. Hopefully, if it goes down below $36,000, then I will flip to bearish. But I am bullish throughout this whole entire order block here. I do not want Bitcoin going below 36,258, around this range here. That's, again, when I will flip to bearish. But for now, exactly what I expected happened. We had this massive dip. Exactly what we've been saying over and over again. And instead of buying Bitcoin, I actually went into DOT. Now, another way to look at this, if you want a more conservative investment portfolio, and of course, none of this is financial advice, but if you're trying to take it a little bit more safe, I'm okay with the volatility. I have other sources of income. I'm okay. But if you want to take it a little bit safer, remember, Bitcoin's dominance is increasing right now. So it might be smart to jump into Bitcoin. As long as we can see this trend continue to go up, Bitcoin will increase by pretty nice percentages and will most likely get to at least 80K to 100K Bitcoin at current price. That's a 100% increase. So in general, again, I don't know how many times from different, ways I got to say it. Although there's regulation right now just looks like a bullish thing for me, considering the fact, that they're trying to take down cryptocurrency. Looks really bullish for me. It just looks like they're scared. They are basically, when it comes to traditional finance, trying to dumb down the effects of inflation. They don't want to say exactly how bad inflation can be, but we know that it's extremely bad. The world looks like it's having some issues in macroeconomic environment. So in general, I will say again, I'm relatively bullish on crypto, regardless of what all the charts are saying, regardless of what people are saying. I think bull run continue at least until the end of the year. And then from there, we'll reevaluate the situation. That's where my current thoughts are. That's how I'm doing crypto, and that's why I'm going all in on cryptocurrency. That's it for this video, guys. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. Catch you in the next one.